A lot of people are excited. I mean, I know the Trump administration is quite excited because they're going to use this crisis, as Rahm Emanuel said, never waste a good crisis. This is a crisis with the government being shut down. And I believe they're going to have significant reductions in the overall size of the government. I believe eventually that would come to the IRS. I think there would be some reductions in the size of the IRS. How would that affect the IRS audits and collection of debt? Well, I've seen some presentations by people I thought that were very wise in terms of how they analyze the IRS. The IRS is trying to do more what we call computer-driven audits rather than human-driven audits. Now, I think we all have in our mind what a human-driven audit's like. You get a letter from a IRS revenue agent and a nightmare begins. A computer-generated audit is where you get a letter from the IRS. Typically, it's called a CP 2000 letter, although there are others. And this letter basically says, hey, we think you didn't report some stuff. Could you double check that? Because based on our calculations, you should probably owe this much in additional taxes. So the way they do that is they've gotten 1099 information. This is what we think they're going to start to do more so starting in 2026 for crypto investors who file their tax returns. They're going to get these 1099 DAs. And if you didn't file one, you're going to get a CP 2000 letter from the IRS pretty quickly. CP 2000 letter is going to require you to prove the cost basis on all your capital gains transactions, or if you didn't report it, to explain why that happened. So we believe this is going to be very computer driven. When you have a computer driven audit, they really focus on that one aspect. There might be major problems on the rest of your tax return, but they're not looking at it. They're just looking at that one item. And this is going to be a major area of enforcement. The IRS has continued to increase year after year, computer driven audits. And we think that even if they have a headcount reduction, they'll still be driving far more audits because it'll be computer driven. So it's not a time to think that you can slip something by the IRS. You definitely need to account for all the income that they know about. Hope this helps.